Hello, financial fans. All is well here. I guess we're expecting snow in the Nashville area on Sunday, between 6 and 12 inches from some reports, and between 2 and 6 inches from another report. Whatever. I don't like snow. I don't like driving in snow. It's pretty to look out the window and see it, but it's a traffic hazard. Today I bought, this is Friday the 14th of January 2022, and today I bought more of VIAC, which is Viacom. That looks like a real bargain right now, and so I'm going to load up on it while I can. And I also bought more of X. X is US Steel. I bought Viacom at $36.44.5, and I bought US Steel at $25.14.5, and I noticed Tesla was up today after I sold it, of course, but it's not up as much as what I sold it for, so I'm going to stay out of Tesla for a while until it gets down to another low price and jump in probably. And I'll give a little bit of information about four stocks, as I always do on stocks to consider. And remember, I'm not a financial advisor, and any money you put into the stock market you can lose, and it has been done before. People have lost money in the stock market here and there before. And the market right now is very difficult to predict. As Yogi Berra once said, it's hard to predict some things, especially in the future. So with that in mind, I will tell you that I am looking at oil stocks with nice dividends, and I am looking at stocks that are natural resource type stocks that might be used if there is a move at some point for the infrastructure, rebuilding, whatever, or if the economy just happens to come back. At some point, people will stop getting sick. I mean, they'll still get sick from other things, but COVID will go away at some point and cease to be a headline item. And that's what I'm betting on, the long-term future. I'm not trying to make a whole lot of money in one day. I just want to buy stocks low and then sell them later on high. And I have no get-rich-quick plans or learn how to play the piano overnight or anything like that. Just don't do silly things with your investments. Think before you invest. And with that in mind, we'll look at four stocks, and these I've mentioned before. I've mentioned all these stocks before, but they're looking more and more like bargains. So go through the numbers. Remember, the numbers I look at: the price-earnings ratio, the 52-week average, the volume, the dividend. If you can get a dividend stock and hold on to it, and it keeps paying the same rate of payment on the dividend, you might do quite well that way. But with all that in mind, let's look at a stock that does not have a dividend. Let's begin with General Motors. And we'll begin with General Motors. Closed at $61.10 on Friday, down 67 cents, and after hours it's up to $61.19. And we look at the column on the left, 2/3 of the way down, 52-week range. $47.07 was the low for the past 52 weeks, and $67.21 was the high, so it's closer to the high than it is to the low. And go down a little further in that column, and we find the volume. On an average day, the average volume, 18 million shares trade, so it's a very popular stock. And at the bottom of the column it says that this stock is considered by the experts to be undervalued. Middle column, third item down, PE ratio 8.18. and that is very good. And General Motors is a big company, remember that. They when they have a PE ratio that low, that is kind of inviting all by itself. And we look a little bit lower, forward dividend and yield, they do not pay a dividend. And the 1-year target estimate, the bottom of the middle column, $76.65. So that would of course be a big move up if indeed General Motors went up in that particular direction. And next stock we look at, Citigroup, symbol C. I think I own all 4 of these stocks we're going to look at today. The column on the left, 2/3 of the way down, we see that the 52-week range, $57.40 was the low and $80.29 was the high. So it's closer to the low than it is to the high. It is now $66.93. It was down 85 cents today, 1.25%, and no movement after hours. We look at the column in the middle, 3rd item down, PE ratio 6.34, 6 1/3 is the current PE ratio, and that is a very good PE ratio for a name as prestigious as Citigroup. And we look a little further down, forward dividend and yield, 3% is a dividend yield. That's nice. And down the bottom of that middle column, 1-year target estimate, $80.47. That would be nice if someone happened to buy it at today's price and held on to it for a year and sold it for $80. Third stock we will look at is Viacom. I bought more Viacom today. VIAC is the symbol, $36.82 is the current price. It added 63 cents during the day, although after hours it went up even further to $36.91. So I guess people are becoming aware that Viacom looks like a bargain right now. Column on the left, 2/3 of the way down, 52-week range, $28.29 was the low, and $101.97 was the high. So it's got lots and lots of headroom. It is way far down from the high, and it is moving in an upward direction. It's got a long way to go to get back up to 101, if it does get back up to 101 at some time. The average volume, the bottom of the column on the left, 13,500,000 shares trade every day, and this is considered to be an undervalued stock. Middle column, 3rd item down, PE ratio under 10, it's 7.2, and that's nice. We like that. Forward dividend and yield pays about 2 2/3% if you hold on to it and just keep accepting the dividend and let the value increase, and then you sell it and cash in when you feel that it might be to your advantage to do so. And the 1-year target estimate, $47.61. That looks like an easy sprint for them, and that would be a very impressive gain, going to $47.61 from the current $36.91. And the last stock we'll look at today, and remember, I'm not a financial expert, I'm not a financial advisor, and you can lose any money you put into the stock market. But again, today I invested in U.S. Steel, and the symbol is X, and the 52-week range for U.S. Steel was $16.13 for a low and $30.57 for a high, so it's closer to the high than it is to the low. Average volume, about 18 million shares trade every day, and this stock is considered to be undervalued, and I do agree with that. 3rd item down, middle column, PE ratio 2.13. So that is an incredibly low PE ratio, and low is good for PE ratio. Forward dividend and yield under 1%, 0.79%, so you're not going to make a lot by holding on to it and just accepting the dividend. But still, it's nice to get a check once in a while. 1-year target estimate, bottom of the middle column, $32.85. That would be a nice move upward if that does happen. And I wish you great success in your trading, and a prosperous new year. Hopefully. It's still got a long way to go. Thank you very much for watching.